When you do these things, right, what you want to do is get your signage and your branding up behind you, right? That's what you want, because that's for sure the best thing to do. Now, you'll also know I'm a hell of a lot brighter than you guys, right?
You are.
In many ways.
Okay. Here we go. This is the reason why. Can you see that? There's one light and there's another one.
Look at that.
Right? So, so let me just sit back.
But check this out. Do you have one of these?
Yeah, I've got one of those. I have a different camera, so I'm using the microphone from that. So when I podcast, I have a Blue Yeti, and those are sweet.
Yeah, that's what I just bought, and Nick just got a blue mic as well.
Yeah,
one step at a time for us.
Yeah, it's great stuff. You'll probably want to get a P cover for it as well, so you don't hit the P's as hard.
Yeah.
But the lighting is really important for your audience so they can see you. Right now, I can see you guys, but you're dark and in different spots. Yeah, that's not going to cut.
How about this?
That's not gonna cut. But anyway, these are just some of the things.
Welcome to the Daxia Podcast.
Yeah, these are just some of the things that you're going to learn as you do a few more of these, and they're a lot of fun to do. So I'm happy to help you guys out.
No, thanks. We definitely we're slowly upgrading, and I definitely want to get one of those softbox lights that you have. Like you have two of them, but at least one. Just so we have that beautifying soft light for our complexion.
It makes a big difference. So I'll do Skype with like Yahoo Finance this week. And when I do that, this is the stuff that I use. Or anytime I Skype with anybody, I mean, like for television, it's perfect. It makes such a nice, it just illuminates your face so much better. And again, for you guys, you want branding, you want, logos. So figure out what those are for your company and then get those suckers, in place.
Thank you. Yeah, we just made our Daxia Podcast logo last week. We think it looks great, and we just appreciate you showing up, putting your best foot forward, and just being a great, bright, and experienced guest.
Well, whenever you guys want to, hey, look, I like helping out people that are entrepreneurs and starting out. So, and I have a tendency to learn a lot more from you guys than I give back. So just FYI.
Well, you started giving as soon as you hopped in. So thanks for that.
Not a problem. So however you want to start, just let me know, and I assume we're just going to kind of go wherever this goes.
We've already started.
This is all going live.
This is perfect.
But no, thanks for joining us. We had I saw you at Blockchain DC. You are Andy Busch. I would just, I used to work with you at the CFTC, and I guess you are no longer there as of last month?
No, as of this month, as of January. So I left on the 4th. Yeah, although you never know, right? Because of the government shutdown. It was kind of hard to tell if I had actually left or I didn't leave. I think I left on the 4th. That's when I sent my letter of resignation in. So I'm officially out. So my views and opinions no longer reflect the views of the CFTC, the Commission, or the U.S. government.
There's the disclaimer.
Yeah.
So, that's a good disclaimer. Yeah, that was good. Well, hopefully everything was processed correctly for you. First thing on my mind, Andy, is there any relation to the Anheuser-Busch empire?
Guys, if there was, I would not be speaking to you right now. Would there? No, unfortunately not, except for the spelling of the last name.
Fair enough.
And any other disclaimers you want to give as far as, so do you own any cryptocurrencies at the moment?
Not at this moment. I've been looking into it. I haven't owned them yet. I'm still a traditional, equities and fixed income guy. But, my background's in currencies, so I've been diving into, for the last 2 years, ever since the CFTC started the process of approving a Bitcoin contract. I think myself and everyone else at that agency did deep dives into the technology, into the governance, into the law of blockchain and cryptocurrencies. So while I don't own any, I'm keenly interested and aware of what's going on. So I have to do more homework for sure, so that I can understand when I lose all of my crypto, what happened.
Yep.
Just kidding.
That's the rite of passage for sure.
That's for sure.
No, you should definitely jump on that, because I think we're obviously big in the crypto space, and we would love to just kind of see you get to own some a little bit. So if you want, I will walk you through that process, because we need to get you on that. But
well, I think to be objective, and when you write about some of this stuff, it's good not to have necessarily any ownership initially. But I think, I've looked through the process of owning a wallet. I've looked to see all of the different exchanges that are out there. And just to kind of launch into this a little bit, I think everyone who is in this space, whether you're trading or not, you need to read the New York State Attorney General's office, the virtual markets report, and talking about these platforms, because they're not exchanges. Exchanges are very highly regulated entities in the equity and derivatives markets. These are platforms, and they're very different, and they contain a lot of different structures. Let's be kind there, as opposed to what exchanges are. So just a full disclosure on what people should be looking at.
So you're still jumping right back into your regulatory hat there, giving disclaimers.
Well, I think in fairness, Nick and Mike, I think it's just really important for people to understand platforms are really different when it comes to trading. We were joking about losing all of your crypto as a rite of passage. I don't want to lose any money anytime when it's needless, right? And I also hate losing money when I'm trading and it's due to the structure of a platform. That would drive me crazy. And I think, given all of the things that have happened recently, whether they're hacks of wallets, and it's usually the periphery that gets attacked more than the core platform. But the ETC hack is really something that should make everybody stand up and take notice. So I'm always trying to educate people on this space, because it is challenging for people who come into it expecting that these are regulated exchanges when they're not.
Sure. I guess from your outsider perspective, since you're not, into crypto at the moment, what do you think, is the biggest hurdle for kind of user or even regulatory adoption of crypto?
Well, it's trust, isn't it? When we take a step back and look at this world, right, it's astonishing. I mean, the combination of all the different technologies that Satoshi brought together is really the breakthrough when it came to blockchain, because a lot of the peer-to-peer, distributed ledger, all of that stuff had been out there before. So he stands on the shoulders of giants when he looks at things and brought them together. So that's the exciting part. Overall, looking at the space as far as, to see where it's going, is the question, is can we develop the trust that you're going to need to have that the regular securities that have been approved by the SEC and the CFTC provide you with, that really just tremendous history and law of governance that goes with regulated securities. That's the biggest challenge, I think, in this space. There's so much discussion about institutional money coming in. It's there on the sidelines for a reason. It's really difficult for any manager of money to go back to their investors and say, it's difficult enough for them to go back and say, hey, look, I lost 10%, or hey, look, I did something that's kind of out of the realm, I lost 20%. But to go back to their investor and say, I lost 100% of your money because of a hack or because of some smart contract that went crazy, that's really difficult, and they won't do that for a long time.
Well, I mean, you at least see, like, I don't know, how do you feel about like Bitcoin futures on the CME? Because, you know, those are a regulated market, for instance, on Bitcoin. And I know there's just been a whole lot of debate on whether or not those were a good idea or sort of a bad idea. So, you know, now that you no longer work there, I can ask your honest opinion on that.
Well, I think for that agency, they're not in the business of, and no really regulatory agency is, in shutting down new ideas and new technologies. It's the opposite. They really want to encourage them. But with this technology in particular, it's challenging on so many different fronts. And so for people who want it quickly adopted and approved, you have to understand that once these regulatory bodies open that door just a little bit, there's a flood of things that come at them that they didn't think about or that they have to learn about, and they have to figure out how the law and the regulations apply to it. So that's one of the biggest challenges. And I think when it comes to Bitcoin, I think the CFTC was very forward-looking. They did their due diligence. They worked with those, with the CME and the CBOE. They made sure the margin levels were set extraordinarily high to protect people. And so I think it's part of a maturation process for the crypto world that you had a Bitcoin futures contract developed and released. So I think it's fantastic. But it also, you know, the way I looked at it was we had that massive run up in the value of Bitcoin. As soon as I saw the futures contract, and I know there's other people who said this, it provided an avenue for those people who wanted to sell. Now, you didn't have that in the cash market per se. I mean, and so this gave the market a two-sided market instead of just a one-way bet, which is kind of the way it ran up prior to those contracts coming online. So to me, Bitcoin falling from 19,000 down to 4,000 makes perfect sense as that world tries to figure out, you know, how this all now gets to play out. It's analogous to some extent, I think, of the run-up in all of the internet-based companies. Pets.com is probably the best example, but you know, we just don't know where it's going to go, and we don't know what the value is. It's going to take time to kind of figure that out, but I think it's a great first step.
Well, so what you're saying is you think that it's not that the futures killed Bitcoin, it's just that it, well, like you said, it gave a voice to this other side of the market that was always there. It didn't have a way to express itself. So inherently, it wasn't like the futures are this big evil thing that ruined the party.
Absolutely not. Actually, I believe it's the opposite. What really ruins a party is when it gets out of control, right? And that's what happened with Bitcoin. I think the rise up to 19,000 showed you that it was too much of a one-way market. There was too much of a euphoria buying that. You got to have both sides of the market. Otherwise, you don't have a viable instrument to invest in. It just doesn't work that way. It's not a Ponzi scheme, right? I mean, we don't want it to be built on something that's built on sand. You want it to be strong. You want to have pillars that go deep. And I think when you have a two-sided market, you begin to develop that.
Well, I mean, I would argue, wasn't there sort of a two-sided market already? I mean, you already talked about, you know, the New York AG report, but there's two-sided markets in every single country of the world except for here, you know, or at least there were until Bitcoin futures, because even CME's contracts and CBOEs, they're relatively minuscule. I mean, they're not huge, especially compared, I think BitMEX does like $1 billion in average daily volume as an overseas derivatives exchange. So, you know, like, do you think that they had that much of an effect, like the regulatory? Because, like, you know, the piece that I actually, the intuition that I saw from it was that everyone thought that Bitcoin futures was going to bring all this institutional money into the space. And that narrative sort of failed to play out a little bit. So it was almost more of a disappointing launch rather than people just jumping on and using them to short Bitcoin.
Well, as a former trader myself, I will tell you that the anticipation of the futures contract drove the valuation of Bitcoin before it came online, right?
Yep. Buy the rumor, sell the news kind of thing.
Yeah, exactly. Markets react to this stuff. I mean, the discussion about it goes back to the March of that year. And if you're wondering what, March of that year, just from then forward, you just saw this massive rally in it because it was anticipating exactly what you said, Nick. So
yeah, well, I think you had the Ledger X, which was approved first,
right?
And everyone was sort of thinking that would be, and then CME and CBOE jumped on board, and it was just like parties here, guys.
That's right.
But what about that was interesting, Nick, what you were saying about from a worldwide perspective. There was there plenty of two-sidedness to the market from a worldwide derivatives perspective?
Well, if you're asking me, I mean, I would say the answer is clearly no. I don't think it was. It was I mean, go back to all of the discussions, the chat rooms. You look at people who are trying to sell, say, $1 million worth of Bitcoin, how difficult it was on numerous platforms to do it. You had to get a letter from your lawyer and write it to the lawyers on the platform. I mean, so I pushed back on saying there was any facility to selling. First of all, just selling what you had. And second of all, to short it, I didn't, I mean, maybe I wasn't that, knowledgeable of the ways to short it, but I know could you borrow Bitcoin and then sell it? That's there's so many things that go around a mature market that you don't think about until you actually have to develop the mature market, right? Being able to borrow something so you could sell it is part of that process. And I didn't see a way to do it in a easy way, right? So that's what was missing.
I would agree with you on the easy way. So I guess, we can just switch topics a little bit on crypto moving forward. So, that's one of the big reasons we wanted to have you on and have kind of other regulators on as much as possible. Like, how does the crypto industry sort of move forward in working with you guys to or working with regulators, do you think, to tell them, listen, we're trying to build good products. We're not, I know there are some of the shady players that want to, front run their clients and things like that. But for the people who are building real things, how do they come to regulators? How do we, I'm sure, kind of like we were talking about before, high frequency traders kind of did it as far as, working into a whole new regime or a whole new technology. And then, the swaps market did it slightly differently coming into regulators. What lessons do you think can be learned for crypto there?
Right. So the swaps world obviously was through Dodd-Frank was driven to the CFTC and the regulatory structure there. The first thing I tell people when they have new ideas, whether it's the Winklevoss twins with their ETF or others, I would say this, and they know this, and they've done a lot of great work with their platform and getting a bit license and working with regulators overall. I would say this, first of all, when you go meet with regulators to explain your idea, it's the very, very, very beginning. It's not one and done. You need to be consistently persistent in explaining and making their jobs a lot easier. In other words, you need to continue to educate and continue to ask them, how can you help them understand what you're bringing to them? So that's the first thing as far as entrepreneurs going to the regulatory bodies. As far as the industry as a whole, I think there's a lot of great movement with some of the industry groups that are trying to develop the VCA. There's others that are trying to create an industry group to be self-regulatory in nature. Look, there is so much and has been so many problems in the ICO space that I think that shows you the realm of all the bad guys that are out there that are ripping people off. So And that happens with a lot of new technologies. If you go back through the history of like the telegraph in the United States, you'll see similar stories. You'll see way overproduction. Even in telecom more recently with things like WorldCom and Enron. I mean, there's all sorts of nefarious characters out there. So I think the industry is in the process right now of developing standards, right? And I think that's one of the key things. When I talked about platforms, many of these platforms have a lot of issues that they're so different from regulated exchanges that the closer they become towards regulated exchanges, the more comfortable larger investors will be. So as we develop this ecosystem, and there's so many things that have to go around this, the law, the governance, industry standards, just trading platforms, there's a whole laundry list of things that have to get done. It seems a little bit daunting, but there's so much money being dedicated towards this. I'm pretty excited overall. I don't see this technology going away. The main focus has been on Bitcoin, Ethereum, obviously, and being able to write smart contracts. I mean, there's wonderful things happening there. It's not just about the currency, but it's about the technology and broader adoption there. So it's in the very early stages of development and thought. So I'm excited about it. I mean, I think people just keep pushing out, just keep doing what you're doing, working hard, trying just to pick off little different pieces of this ecosystem to work on and develop. I mean, identification is one of those, right? A legal identifier is a digital identifier is one of the, just one of the aspects of it. Custody is just another aspect of it. So a lot to munch through here, obviously, but as you're developing, if you're trying to create this separate system away from the regulated system, the closer you bring that system towards a regulated system, the faster you can have adoption.
So that seems like especially for this space, which has historically been, at least from a cultural perspective, a little bit adversarial towards regulation, libertarian minded, like there's this adversarial thing towards regulators, but everything I've heard from you is more about like creating an alliance between the two, and just creating actually a coming together, but that seems like a really tough hurdle to jump, or maybe it just seems that way to me. But what do you think? Do you think that's just an educational issue? Like, how do we start that shift to where it's like, hey, if you want to start a crypto company, actually call your regulators, get in conversation and relationship with them, and instead of just, putting your hoodie over your head and hacking away at your project and ignoring the issue.
Yeah, and I think that's a great way of looking at it. Look, I totally get the libertarian component to this. I understand the thrust that was going on in leading up to 2008, in the fact that people were disappointed with the financial institutions and what happened at that time period, and specifically with the banks and also the central banks. But I would say this, look, if you want to stay completely independent and provide that, functionality for people that are out there, there's currencies that you can trade. You guys probably know them better than I do, that allow you to do that, that can be outside of the normal, banking system, but also the regulatory reach, including FinCEN. And so there's that world. If you really want to develop the product, if you really want to get broader adoption, if you really want to take this where it can be used in a much bigger way, well, yeah, you're going to have, there's reasons why these laws developed over time. There are these things called investor protections, and they're there for a reason. I will tell you that even myself going to work for the CFTC, I kind of looked askance at regulators when I first took the role. I was just like, okay, I'll come in and create this, this research team will focus on, what's going on in market dynamics, liquidity structure, all of that kind of fun stuff. But then you begin to realize how many enforcement actions are taken and why they're taken to stop people from doing illegal things that hurt people, that lose all of their money because of these games that people play. That's where your heart gets broken and you go, hey, you know what? You can be libertarian to all you want, but if you're asking people to give you their money, that is a different game. And then trust matters in that world. So that's what I think. Sorry, I don't want to get too passionate about that.
No, that's perfect. Because you were an outsider. You came into a government agency, or the CFTC, and it sounds like your eyes were opened to all this stuff that was actually happening, and so you understand the purpose and the real good it does. Everybody else is also, we're all outsiders to that.
Yeah.
And perhaps, the more awareness that is brought to this space on those good things that it does and the reasons why it's important, the education aspect of that, I think it could help a lot. I've learned a lot. I'm an outsider too, and we had another conversation with somebody from the CFTC. We're going to release that podcast soon, but I've learned so much about all this stuff just by getting into crypto. And at first it was like, oh, regulation bad, this is going to, somehow hinder my potential. It's going to make me pay more taxes and these kind of things. So I started looking more into it. And the more I've learned, the more it's like, well, no, there's actually a lot of logical reason for all of this. And so, and I hope that this conversation is also bringing that to other listeners as well, who might be somewhere where I am. And Nick, you're like the opposite. Like you're also, you were inside of it too. And so you have more awareness than your average person. Both of you guys do.
Well, no,
yeah.
I mean,
I was just going to make one point. If you're comfortable with knowing that on these platforms that people have inside information and they're trading on it, and that people are front running your orders, or that people are doing all sorts of things that are not allowed to be done at other places, hey, that's fine. But here's the question you have to ask. If you feel like you're in the know, right, and you're wondering who the sucker is, you got a problem, because that usually means you're the sucker if you don't know who you are. And that's the problem with unregulated platforms.
Well, on the platform piece, the one thing, like, why do you think that none of them have sort of come forward and registered? Because I know that, Ledger X sort of was the only person who's really gotten through the entire process for crypto specifically. But it seems like, even though there's all this money in the space, it seems like such a daunting task to go to a regulator and say, like, I want to be a registered exchange, that people are like literally just saying, like, I'm a platform, I would rather not. So do you think there's some like give and take that needs to happen?
Well, that's certainly, I think, Kraken's point of view.
Definitely.
I referenced the New York State Attorney General's virtual markets survey that they did. And I would say, yes, of course it's difficult. That's the point. I mean, when you're talking about people's money and protecting people and their funds, yes, there's a tremendous amount of regulation, because that is the oldest game in town, right? Is separating people from their money, right? And stealing it. That's what bank robbers like to do, but that's what a lot of other nefarious people do in the financial world. I mean, it's sad, but it's true. And you can go through, just history of bad people doing bad things to people in finance. So yeah, it's a lot harder for a reason, because you're trying to protect hard-earned money. And so for all the guys that are out there, they're like, well, I don't want to go down. That's too much work, and that's not who we are, and blah, blah, blah. Totally understand that. I get it. But again, if you're asking people to give you their money in trade, then the people that are giving their money, if they're not smart about it, if they don't do their homework, then they deserve to lose it as far as I'm concerned. Do your homework. Don't trade on platforms that don't give you the protections.
Well, yeah, but at the same time, like it's pretty expensive. I don't know the exact cost, but like to be like, say, a DCM or a registered futures exchange, it's what, tens of millions of dollars to go get registered. This isn't really, that's the one thing that you hear from a lot of other countries is just, oh, come work in our country because you can be a registered exchange, for free or whatever. Like, it seems like a lot of other, because, I know from my point of view, like you can build like a website that's a, futures exchange in kind of a weekend at a hackathon. It's, it's like not hard to necessarily set up. It's just one of those things but now it's this giant regulatory hurdle before you can actually go let it function.
And it's not hard to hack something that's not hard to set up.
Well, okay, so if it's not either or, do you think, Andrew, there's any way to lower the hurdle or find that sweet spot, or you might think we're in that sweet spot of how difficult it is, but to balance the protection versus maybe the burden on the side of the businesses or the investors to be able to, it's hard enough to start a company and build new technology. Is there anything that the regulators can do to just reach out a hand or lower the barrier to entry just enough so that there is the coming together?
This was like the whole sandbox idea.
Exactly. Yes.
What's the sandbox idea?
Yeah, safe harbor and sandboxes are, the FCA's done really interesting work there. And the CFTC's, obviously, with Lab CFTC, it's doing something similar. So they provide these spaces where you can come in and show what you're doing, and hopefully get some assistance as far as taking a look at the product that you're doing. Yes, the world of finance is highly regulated, so there's barriers to entry. There's no doubt about it. Again, you can set up whatever exchange you want and have it be very different from a regulated exchange. You will not have the protection of the law as an investor to go in there. I think there's so many wonderful examples of the hacks that have gone on, a smart contract that was written incorrectly that took all of the private keys and lost them. I mean, there's all sorts of things like that have gone on, and it's a nascent technology. I get it. So the more that you can work with regulators to avoid those things, the more likely you're going to have a viable product. I mean, that's really what we're trying to get at. You're not just trying to create something on a whim that people can quote unquote trade to make money, because more often than not, if you don't have the protections in place, you're going to lose money. You're just increasing the odds of bad things happening, bottom line. So for startups, that's what I would say, and I keep telling people who I've spoken with when I was at the agency, it's like, stay with it. Don't quit. Keep going back to regulators. Keep asking them for help. Participate in, the committee hearings when you see, like, the CFTC has a fintech group that's run by or sponsored by Commissioner Quintens. The FCA has these hackathons. Be part of those things. Go learn from others. Stand on the shoulders of giants. I mean, you don't have to do it all. You don't have to reinvent the wheel. You just got to combine things in a different way to make it better, just like Satoshi did. So that's the fun part of this.
Just like Satoshi did.
That's right. Easy, right?
Yeah. It's like creating Bitcoin is like the same as like getting something approved by the regulators.
Right. Well, I mean, but
where can people go to find out more about some of these opportunities you're talking about? Because I think part of that, what can the CFTC or regulators do to sort of reach out? What kind of outreach can they do to bring that awareness to call, these businesses and these startups towards them, instead of all the burden being on them to figure out where they fit in and how to fit in?
Well, they do lab CFTC, and I mean they did, which was great. And I know you probably saw the request for information for Ether.
That's true. I did see that.
Yep, that's a good example. Lab CFTC holds office hours in different cities, so you can reach out to them at the cftc.gov website. Almost every government agency in the United States, not everyone, a lot of the financial ones are looking at these type of sandboxes, or have people that are in the fintech space working on these things. The World Bank has it, the IMF has it, the Financial Conduct Authority of the UK, FCA, has these things. Dive in. It's really easy to Google these things and find them, and just start, going down rabbit holes and looking for stuff and looking for ways. There's tons of podcasts on this stuff as well. Even with those people, I would humbly state, if you go back to the podcast that I created for the agency, CFTC Talks, there's a lot of great information there. You guys are doing some great work. I've just restarted my podcast, Engage with Andy Busch. And this week, we're going to have Kevin Warback, who's a professor at Wharton, talk about his new book, Blockchain and the New Architecture of Trust. That's a great resource. So there's a lot of stuff like that out there. Awesome.
And I
so everybody out there, bookmark cftc.gov and,
Yeah, that's a good one. Engage with Andy Busch. That's a better one now.
That's a better one.
Did somebody take over your podcast?
No, they have not.
Do you think somebody will? Who'd you give it to?
I would hope to. I would hope they would. I would also hope that the chairman appoints a new chief market intelligence officer. I think it's a highly valuable role. One of the things that I got to do was, direct a team of 30 researchers. We created research. That's a lot of that research on market structure, dynamics, liquidity, fragmentation is actually up on the site, but no one's going to find it because you have to look under about 3 different clicks to get to it. It's under staff reports. One of the other things that I did, and I think this is highly valuable for any agency should have this role, right, of chief market intelligence officer. Because basically what you are is a filter for the chairman of the agency, in which you're saying, hey, look, I'm looking at all of these interesting things that are going on in the markets. Here's what's happening. Here's the narrative surrounding the market movements. Here's what you need to, understand, and here's what's going to happen in the future. So I think it's that forward-looking component that's very, very helpful for a chairman and also for the rest of the commission and the rest of the agency to look, and be aware of potential problems that are coming, new technologies and things like that. So I love that role. I was on a weekly phone call with the SEC, the Federal Reserve Board, the Federal Reserve of New York, the Treasury, and the White House discussing these issues as well. And you really learn a lot from the different agencies on how they look at the world and what they do. So that I know is ongoing, and I really believe that you need someone in leadership to be part of that so you can communicate that back to the chairman of all the different groups.
Sure. Like whenever you were on those calls though, was it like, did you go talk a lot about virtual currencies, like on a scale of 0 to 100, or was it all just, normal futures options market oversight things?
Well, everybody on these calls realizes how small Bitcoin is. I mean,
right.
It's in the realm of what we look at as far as the financial markets. So when we first approved the contract, there was a lot of focus on it. There was a lot of uncertainty about it. As people got comfortable with it, it went from maybe number one or number two in the early discussions down to like, we didn't even discuss it because it's such a small component. I mean, things like the February 5th meltdown with the volatility products and the ETNs that were out there. Things like, sharp movements in the natural gas market. That was a big mover. Just other problems within the structures of the markets really is where the focus was for the SEC, the Treasury, for obviously the Federal Reserve Board. They were very interested in interest rates. Treasury was, interested in issuance. I mean, these are not things that were surprising. The angles and the things that they were interested in, those were fascinating. And what blew me away, and this is something I really took away from the whole experience of being there, was the focus on what Nobel Prize winner Robert Shiller writes and what he calls the economic narrative, what I call market narratives. But economic narrative is the stories that people tell themselves about what's going on and what's driving values. That surprised me at how much discussion occurred during those meetings on narratives. And it really was a great tutorial for me to say, you know what, this is important. Learn this stuff, help people understand what's going on with that. And again, just to wrap this back, I really hope that whether it's Chairman Giancarlo or Chairman Clayton or even Secretary Mnuchin, I hope they appoint somebody with this role in these different groups, because I feel it's such a value add for not only those groups, but also, I went up to Capitol Hill and did briefings for staffs on the Senate and on the House side, letting them know what was going on in the markets and what to anticipate. So it's a broad role, and I think it really helps many groups within Washington, D.C.
Definitely. Yeah. I know I had talked to you whenever I worked there, and that was always good. You had sort of tried to get a lot of us together to do some research together, which, I know sometimes people don't realize, like, even within the agency, you can have silos sometimes, especially even, talking to the SEC was like, you would you're better off just going and Googling for information rather than trying to get things from the SEC sometimes, because it was just so closed.
Yeah, I think that, one of the things I learned from Chairman Giancarlo's leadership and just my own experience is that when you're dealing with other agencies, and this can be applied to any business, truly, or even your own personal life, if you're always looking out for yourself, if you're always trying to get something for yourself, you're really not going to go anywhere. You have to reframe things. You have to look at, what can I do for other people? And I know this is going to sound hokey, but I start my day every day by saying, who can I help out there? So I start the day with this acronym, HOPE, and that is helping other people every day. And when you do that, it opens up the world for possibilities of information flow and relationship building and working together in cooperation. So I think you're right. Prior to this Chairman Giancarlo coming into the CFTC, I think there were a lot of silos, not only with the agency, but every other financial group. And it takes time to break those down. You have to expend a lot of energy showing that you can help other people, not ask for anything in return. And then eventually, and this gets back to Bitcoin, you develop trust, right? And ultimately, trust is the underlying foundation for all of the financial markets. And if you don't have trust, then you're really not going to have people participate in trading or investing in a product. And I think that's really just such an important point to learn.
Mm-hmm. Well, I think that's the whole goal of Bitcoin. You sort of want to take the trust out of these financial products. Isn't that like the catch line? Like, these are trustless financial products, and we're trying to build them.
In a trustless environment, you're creating trust. It's trustless, but
two different types of trust here we're talking about.
Well, you're creating because you've got economic incentives from the miners to do their work, right? To get to 51%. You're trusting their work. Now, you're only trusting them to verify that the information is there. You're not trusting them to verify that the information is correct. Now, those are two different things, right? Mm-hmm. But you're trusting them that this block is written, time-stamped in the right sequence and so on. So yes, I mean, it all comes back to trust. And I think that's probably the biggest takeaway when you look at regulation. When people say, it's such a drag, it's no good, it's costly, it's blah, blah, blah. Totally understand that. There's a reason. You're trying to create trust. And I think that's just, keep that in the back of your mind when you hear people say these things they're just, sand in the machine. It's not good.
All right. No, I think we can sort of wrap it up a bit, be cognizant of your time.
Thank you. Yeah, sure.
You gave us.
Yeah, we have. That's a great note to sort of end on. Hope and trust.
Right. That's right. Well, guys, thanks. Glad to come back on again sometime soon. I'm running around doing a whole bunch of different things, and I wish you the best of luck with what you're trying to do.
Definitely.
And keep up these video casts and podcasts and things that you're doing, because the more information, the better.
Where can people check out your podcast?
So on iTunes, it's Engage with Andy Busch, B-U-S-C-H. My website is andrewbusch.com, all one word. And
I think we got it.
Yeah. And I just posted my first research piece on Mueller in the markets, right? So this is the pending Mueller report, I should say, not Mueller, but Mueller report. And I was so happy to post it first thing yesterday morning, because late in the day, we got information out that report is coming soon. And the article talks about the market narrative. So sorry, not too much self-promotion, but this is all free. None of it costs money. It's on andrewbusch.com, so check it out.
Awesome. Thanks, Andy. This was a blast.
Yep. Thanks for engaging with us.